Good morning, traders. It is Thursday, August the 8th. Taking a look at the charts. On the left, we got our trend analysis chart, meaning when the bars are green, we're in an uptrend looking to buy lime green dips like we've seen in the past and look for some shorter term targets. When they go orange, we're looking at a trend reversal to get short, and then red bars mean we are in a downtrend. Now, if we look over at the daily chart on the right-hand side, you can see we've also obviously had the big drop in the market. And now we're getting this rebound. We've had some pretty big volatility intraday wise. These big candle spikes, these are the W formation that we formed on the 30-minute chart. And W formation's pretty strong pattern. It's also known as a double bottom, and typically the height of the W from the bottoms to the middle part is usually the upside target to the upside. And obviously we've got this big price gaps. Gap windows tend to get filled. In the SP 500, about 95% of gap windows get filled. So all this is pointing to potential pop and run to the upside to fill this price gap. The market closed right about up there. So we got a pretty big gap window. Not always the entire gap window fills. Sometimes it's just the actual pure gap where price never traded. The market makers move the price. They kind of create a bridge in pre-market trading, get it, create this gap, and then go down. So today will be, over the next couple sessions, is really going to be interesting. The market's set to gap higher today. Look like on some stronger China numbers, economic data. So the market's going to gap up today, but again, it's going to look for a gap fill. We are in red bars, meaning gaps to the upside should get sold down. And if this gap does get filled over the next couple of days, we could very easily see the market sell back off and come down. Now the big question is this, let me clear the chart. Now is this bounce here going to be something similar to this bounce here? This is, I talked about this setup being the same as this setup. And so far we've had that first leg down, and now we're getting that bounce, and this is exactly where we're at. So the big question is this a V-shaped recovery where the market takes off to the upside for the next week or two and puts in a potential double top or pokes to new highs or at least gets up to the 3,000 mark? Or are we going to get into the next leg down? And if we look at the 30-minute chart, let's just look over at the 30-minute. And if we just zoom out on the chart a little bit and move over, you can see this was the May sell-off. We were long going into here, we made money, and then we shorted it, we caught the drop, and then of course it got into some more volatility. And if we look at the price action, this W formation, this consolidation, which may end up stretching a little bit higher, is going to be very similar to this formation that we have here. This is the big volatility in price, not so much the VIX. The VIX is already starting to fade, but price volatility, big swings are happening. And the big question is, how is it going to resolve next? Are we going to see that big continued sell-off go down, or are we going to see the market recover? And right now, the trend is down. We got to stick with the trend, and hopefully we see this kind of boil up here, roll over, and sell off. So we're going to keep our eyes open for the next major move. We are in position for lower prices. The market is set up for lower prices, and that's where the broad market is headed. So let's take a look at the VIX real quick so you can see where we're at. Initial spike in the VIX, a big pop there. It's already faded back down. If we do get another leg down in the equities market, let me just show you what happened back. Here we are in May. So the way the VIX works is usually the initial spook of the market is the biggest in the VIX. So we saw initially the big spike in the VIX. It came up, and that was the first drop in May. And then the VIX pulled back down, which is kind of where we're at now. And then the stock market sold off and dropped dramatically, but we didn't see the VIX go up to hit new highs. It's the first spike that usually really scares everyone, gets their heart rate going, and then after that, their mind is kind of set that things are going to be wild for a while, and the VIX doesn't quite peak. So I wouldn't be surprised if we see the VIX spike back up again if we get another drop down. We'll see how things go. I I talked about it right up here at the close, fading the VIX using a short VIX ETF or put options. So far those have played out, but overall not looking to trade options. I don't trade options with this newsletter, but it's just an option for some of you guys. I know a lot of members trade options or just options. Now let's take a look over at the precious metals here. Gold, beautiful pop yesterday. Nice big run up. We got out at the open above our target price for about a 15.5, 16% gain on the portion of it. We've moved our stop to break even. So now we've got pretty much a risk-free trade. No matter what happens with gold, we should at least break even, if not make a bunch of money on it. So we got a nice profit there. It's had a really nice run. It hit our first Fibonacci target, and it's got potential to go a little bit higher. Um, but overall, it's had a nice run. And this type of move, it kind of was somewhat on news. So overall, news-based pops usually fizzle out and consolidate. We do have a downward cycle for a few days, and of course, in a downward cycle, during an upward trend, we should just see the market kind of pull back and hold its ground until the cycle bottoms out again, and then we should see another run higher. So that's what we've seen here. You see a run higher, and then you get a cycle down, and then you get a cycle bottom, and then a cycle down, cycle up. We've got several different cycles at play here, and overall, looking at potentially a couple weeks here, or a week and a half or so before the next potential run to the upside could take place. And don't be surprised if we see gold, silver miners all pull back. If we see silver, it's actually down 1.6% today. It had the biggest move yesterday, up over 4%. Usually what goes straight up on news, as we know, usually comes back to give back at least half of it within a day or two. So the market's just fading back down, but overall, that's what happened over here as well. We had a pop, and then it fades back down until it's re-energized, have a new cycle low, and then we see another pop, and same thing happens. So market likes to stair step its way up. And if we take a look at the trend chart, you can see here how the market's been trending down, had short signals, and then finally the trend started to reverse, and we get into buy signal, rally, buy signal, rally, and we got in. We got along the miners down over here. And if we take a look at the miners, SIL, they had a nice move yesterday. Same type of thing in a downtrend, finally turned up with buy signal, buy signal. And if we zoom into the shorter term price action, if you look at the price action that's been going on, you got to think of price gaps still as one long bar. So we had a rally up and a bull flag, and then this big gap. It was a rally up and then a bull flag, and there was this gap in here. The market fades back down to fill some of the gap, at least the gap between the pure gap between the previous day high and the opening price. So the market faded back down, and then we had another big pop. We've got another gap window from this previous day's high to the opening price somewhere up in this area. So the market faded back down, and today it's going to continue to fade down. We're going to see it trade lower, potentially fill all the way down to this gap window. But overall, it's a series of bull flags. Bull flags mean higher prices, and one of the reasons we kind of saw some resistance here with the miners, let's just get more price action. You can see here is previous resistance. Going on across this chart here, we gapped up into a level that it's hit a couple times before. It was some selling pressure. So overall, this was a pretty nice move. We did pierce to new highs. It's pulling back. The next run likely to take a breakthrough and continue to go higher. Looking over at natural gas, up 1.5% this morning. It's still in the downtrend, red bars. Let's just look at the daily chart. Looking forward to put in a bottom. It's still forming a bear flag here on a short-term basis. If you look at it, we've had a very strong move down, a little bear flag. Bear flags are the halfway mark, meaning we're going to see continued potential sell-off, break the $2 level, maybe test the $2 level, and we'll be looking for some type of bottom to start to form. And when we break the bottoming formation, we'll be looking to get long for a significant move higher. Crude oil up 2.5% today. Yesterday it did break down. We talked about this little tiny bear flag forming, how it was starting to break down and pick up speed. Our downside target were these lows right over here. It ended up closing at 51, which was our first downside target. If this gets really ugly and starts to break down, we're looking at this 40, 42, potentially 44 area as the next major downside move for crude. And we talked about this a few times. You can see this significant support zone, but if this is broken, it's going to go into a parabolic. It's going to pick up speed, and we can see a huge waterfall type sell-off down to this level, which would put it very oversold with a potential double bottom for at least a knee-jerk reaction bounce off that level if it hits. It could be a tradable bounce. We'll look for some patterns to form here. Maybe we look to get short if it starts to break down for this quick collapse. It'd be a very significant move at that point. Anyways, that's about it for today. Other than the dollar, let's pull up the dollar real quick. US dollar's trading relatively flat again today. It's holding its ground here. The big question is it trying to find a bottom here and start to bounce higher, or is it going to break down and more or less double the move that we've seen? So we've had this move to the downside. We've got this potential bear flag, this consolidation, and the second half of the move would bring us somewhere down to the 2620 area, maybe a little bit lower. That would spur on a pop in precious metals, but overall the trend is still to the upside. It's on trend line support, it's on the 20-day moving average, and it's also in horizontal support fading down. So we'll see if it gets some traction. If it does, metal's likely to pull back for that week or so. If it breaks down, we're going to see metals probably find a bid and start to rally again. Anyways, that's it for now. Talk to you in a little bit. Bye-bye.